So we're diving into this mix of Fed moves and European political drama, right? It's definitely a dynamic scene with dovish Powell signals on one side and some political turbulence in France on the other.
Yep, it's a roller coaster. How do these dovish Fed signals play into the broader market outlook?
Well, Powell's talk at Jackson Hole was key. His hints at a potential September cut, especially if labor data weakens, have been stirring up risk
Hmm.
appetite. Basically, that has pushed equities up and brought bond yields down.
Right, but isn't that a bit over optimistic given that the US labor market shows some soft spots?
True, true. The market's in a delicate balance. Think of it like walking a tightrope. Small shifts in hiring or firing can
Yeah.
tip the unemployment rate higher. And if consumer spending stalls alongside creeping inflation, the outlook gets murky.
And then there's Trump trying to poke his nose into the Fed, right? How do you see that playing out?
Exactly. Trump's attempts, like the move to fire Fed Governor Cook, add a layer of uncertainty. It's like forcing a square peg into a round hole. The Fed's independence might be compromised, though outcomes are still hanging in the balance until the
Hmm.
courts decide.
And what about Europe? It seems like the ECB is taking a wait and see stance, especially with all this rate cut chatter in the US.
Yeah, the ECB, after that hawkish July, is more on hold. They're eyeing issues like the EU US trade deal and maybe holding off until December before any action. Meanwhile, euro rates are gradually creeping up due to
Yep.
fiscal pressures.
Speaking of Europe, the political scene in France is really heating up, isn't it? There's talk about Bayrou's government possibly falling.
Absolutely. Beirut's calling a confidence vote over his unpopular 2026 budget, with huge cuts and tax hikes, which the opposition is not backing.
Yeah.
This could trigger either a new PM appointment, snap elections, or a prolonged period of a caretaker government, which adds downgrade risks for France.
That sounds like a recipe for market volatility. And then there are the rate differentials driving EU USD higher, right?
Exactly. As Fed rate cuts outpace a cautious ECB, the narrowing spreads are setting up the euro for a climb, potentializing EUR USD movement up to around 1.23 by early
Indeed.
2026. Plus, a credible Ukraine peace deal could act as a real game changer for European currencies.
But do you think the reliance on political shifts to boost equity prices and currencies is a bit of a gamble?
I get your point. It's like betting on a coin toss. However, if the Fed eventually aligns a bit with Trump's stance, it might support higher equity prices. Still, downside risks remain, especially if the labor market weakens further or if political disruptions in Europe persist.
Right, absolutely. So, basically, we're watching multiple threads: labor dynamics in the US, dovish Fed signals, and political twitches in Europe, all intertwining.
Exactly. It's a complex web where any shift, whether in Fed policy, US employment, or European political outcomes, could have a rapid impact on markets. And that's what makes this environment so intensely interesting.
Yeah, fascinating stuff. Definitely something to keep an eye on in the coming months.
For sure. With forecasts hinting at a possible decline in yields on one side and rising EUR USD on the other, it's a market scenario that calls for careful, balanced monitoring.
No doubt. Thanks for breaking that down. It's a lot to digest, but definitely engaging.